Perfect. Welcome, everyone. Welcome to GreenMobility and today's webinar on competitor and market overview. My name is Anders Wall. I am Head of VP Investor Relations here at GreenMobility, and I'll give this overview today. During the webinar, you're very welcome to post questions in the chat. I see them and we'll be able to answer them as we go along. So maybe just a very quick introduction to Renewability. We are a electric car sharing company. We've been in operation since 2016, based here in Copenhagen, and now operating in 8 cities across Europe with a total of 950 EVs. We are very focused on being a green company, doing something good for the society, the cities that we operate in, which is also why you see the greenest mobility provider. This is something that is very dear to our heart, that we focus on the CO2 that we're saving, and in general have a high emphasis on ESG in our company. That's for a different webinar, not today. Today the focus will be a little bit on the development on the market, car sharing market, and also the competition and the development we've seen in the past year or so. To begin with, maybe a little perspective on what's happening around in the cities, and not least the interactions between different mobility types. One of the key emphasis in cities, in addition to literally improving the environment, is also to reduce private cars. Obviously, this is where we see car sharing playing a significant role, but also in the interaction with other mobility providers. When we look at a typical city setup, we have traditional public transport, trains, and buses, similar to that. We see them as we call long distance here, typically more than 10 kilometers. They're able to move a lot of people at a low rate. We can never compete with that. Obviously, the price and the schedule runs it's a different perspective. Then we have short distances, could be bicycles, could be kick scooters, or even just walking. Typically also areas where the car won't go. Our main focus in GreenMobility, but also car sharing in general, is this mid-distance segment, where we typically have trips of 5, 10, maybe 15 kilometers, and also with a need for flexible routes that's not necessarily going the same direction or planned track as public transport. Our key focus is also to replace private vehicles, so we lessen the burden on cities in terms of parking, congestions, and noise, and so on. All this together. So it's also about creating a trinity between the three types of mobility in the city. Then when we start looking specifically at car sharing, there are a number of different types of car sharing, and in general we can put them into two groups. We have free floating, which is what GreenMobility is doing, and then we have station-based, or it's also called round trip car sharing. There's a lot of differences, and just to give you a small overview on this, we see typically station-based are obviously station-based. Maybe to put that into context, they are at a fixed location, meaning you have to pre-book them and you need to go to a specific location in the city. Could be a big park, a car park, or similar. Whereas free float, they are positioned around the city within typically an operational zone, in front of your house, the office, wherever. And there's also differences in trip length, where free float is more spontaneous. This is something I need now, where station-based tend to be something that I plan in advance, also typically for longer trips. There are, of course, a lot of crossover between the two models, but we see the biggest growth these years in free floating. This is also typically where we can actually replace private cars in the city, where again, station-based or round trip are traditionally for longer trips between cities or going countryside or similar to that. Obviously, that enables also a different operational model where station-based focus on smaller fleet sizes, and in free flow car sharing we need larger fleets in order to cater for people around the city or the operational zone. We also believe that we are able with free float to have a bigger impact on the city, both in terms of CO2 reductions, but also reduction of private cars. These are two vital parts for our environment, but also the cities that we operate in. And they will become increasingly important across Europe, across cities. And from there, maybe a natural step is to look a little bit on the market trends that we see. A lot of the change in mobility, well, you say that we have two points of impact. One is the cities. I think in the past few years, especially maybe the last year or so, there's been a significant increase in the focus from cities, from city planners, politicians, and so on, to make actual step changes in mobility. This involves making subsidies for EVs, for alternative transportation, rearranging parking structures, putting in charging infrastructure, and a lot of other things to enable and motivate this change. On the other side, obviously, we have the users, our customers, but citizens of the cities. And here we've seen a tremendous change as well, some even enhanced by COVID. It's given a sort of a moment where you've taken the time to rethink your mobility structures. I think the biggest, there you can read a number of reports, a lot of predictions on that. To me, I think that the common denominator is that everyone can agree this will grow, and maybe also it needs to grow in order to actually make an impact in the cities. Whereas 43 user preferences, or we see 40% of city mobility is expected to be by shared cars. All of these are clear trends that we are changing, and we also see it in actuality in cities around Europe these days. In addition to car sharing, it is also very clear that EVs so electric vehicles have become the preferred way, and obviously it goes very well with the focus on reducing CO2 emissions in cities, where mobility in general transportation is one of the biggest contributor to CO2 emissions. We see cities around Europe setting clear goals for the ban of traditional cars for internal combustion engines by 2025, 2030, and so on. Naturally, this motivates a move into electric mobility, but hopefully also into shared mobility. And I think from our perspective, we can see a clear difference in the last 4 years, where it's gone from being a sort of a nice to have into a need to have now. We need to make these changes, and this is driven to a large extent by cities. Then obviously, I think that the last point is also, this is very nice, the big cities, the big capitals where you have 1, 2, 3 million inhabitants. It's nice, you can see an obvious model for car sharing. But when are we moving into smaller cities? I think the clear answer is that we are already seeing this. There is a path, there's a development. We need to change habits, because that's fundamentally what we do. We need to do something different tomorrow than we're doing today. But already today, we in GreenMobility, we are operating in cities of 250,000 inhabitant size. I think we wouldn't have expected that 2-3 years ago. And obviously over time, this will go into smaller cities. It does go back to the business side, and so we are constantly evolving in terms of how small a fleet can we operate, and also see it becoming a profitable business. If we move the focus even further, I think this is also when we look at the European market. Today, we have a potential of more than 160 cities around Europe. And obviously, this is something that GreenMobility is contending for. But it's also showing clearly that the market is growing. We see some clear figures and projections for users, where it's expected by 2025 more than 20 million people will be using shared mobility. That's a very interesting growth rate, but it also has a significant impact for cities and all of us around. most likely it will happen over the next 2, 3, maybe 4 years. We see this transition is already happening, clearly motivated by cities, but also a number of new operators and existing ones obviously growing as well in size. We'll get a little bit back to the competition more and specifically, but I think when we look at the potential, possibly Europe has a high density of that, and is also possibly the region where it's most mature at the moment. So before we go into to the details on our competitors, maybe just a few and highlight of GreenMobility and where we are today. As I mentioned at the beginning, we launched in 2016. We listed the company already a year after that, and then last year we went on main market on Nasdaq here in Copenhagen. Today we operate in 8 cities across 4 countries. So in addition to our hometown of Copenhagen, it's Aarhus in Denmark, Malmö and Gothenburg in Sweden, Helsinki, Finland, and then 3 cities in Belgium, Brussels, Antwerp, and Ghent. These are the green dots you see in the map here. Then we have what we call announced cities as well. So cities where we have made active, we are in active plans and preparations for launch. So clearly it's Oslo and Vienna, and then Germany as a whole. We haven't specified the city yet. But going back to the slide before, obviously the potential city, the number of cities is much bigger in Europe. The interesting part of course is also we see this growth coming year by year. So an increase in customers, increase in trips, obviously also increase in CO2 emissions. But more and more people are taking up shared mobility. It's becoming a natural part of moving about. And we're also familiar with it when we go to new cities because we just find a local operator that doesn't have GreenMobility. Some of the trends when we look into maybe specifically our competitors, I think specifically also last year, which I think for everyone has been a challenging year. There's been relatively little development on car sharing markets, obviously tied to lockdowns in various cities. If we're not going out, we don't need mobility, and why should a shared mobility company invest in a new city? We chose to do that. We actually launched 5 new cities last year despite COVID, and while it's never easy to launch in a period like that, it also enables us to get in from the beginning and be ready for an opening of society, which is what we're seeing at the moment in various cities. And interestingly enough, it's clear that as society opens, schools are returning, shops are opening, restaurants as well, and so on, it picks up almost instantly shared mobility as well. We are connected, and not only us, but also our competitors, we are connected to the mobility of cities. Fundamentally, whether it's us or a competitor, it is down to how we operate the business. And basically, that's not any different than any other business. We need to be very efficient in our operation. We do operate a large fleet of cars, and make sure that they are positioned in the right location, they are charged and ready every day. And possibly this is also where we differentiate in how we operate, how we insource, outsource our business. And I think that's ultimately what's going to separate the winners in this business. Luckily, we do have competition, and I do mean this luckily because it's helping to build this market. It definitely helps our customers and the citizens around the cities we operate in. There's an increased supply of shared cars, which also tied into availability as a key factor. So while it would be nice to be the only one, we also see that having more operators is helping to build this market. And similar I think for cities and suppliers, this helps to build the market faster. Then, if we jump into an overview of the market that we are in today, it's defined as free flow car sharing in Europe, and there might be maybe just a small disclaimer. There might be a new car sharing operator somewhere in Europe that we are unaware of. but at least this is the main operators we see in Europe today. Share Now, which is the merger between Drive Now and Car2Go a couple of years ago, is obviously the biggest one in the market. But then we see a number of mid-size operators, and then a few smaller ones as well. Some of the key elements that we typically look at, obviously in terms of judging size, fleet size, but also number of cities. And what it doesn't say here, also the capability to operate across borders. I think that's definitely a differentiator. It does require something to operate across different markets. We also see the type here, and maybe just a small clarification. ICE means internal combustion engine, so traditional gasoline and diesel cars. EV, electric vehicles, and then you have HIV and PHIV, which is hybrids, different whether it's a plug-in or not. Clearly, we only have a smaller number of purely EV companies here. I think this is going to be instrumental in car sharing in the future. We need to base our fleets entirely on EVs. And we also see a tendency that the fleets that are currently mixed, they obviously at some point they will need to change. Traditionally, the industry is relatively young still. I think looking down the list, the average age is around 4 years. And then the last part, which usually strikes everyone, is that a lot of these operators are either wholly or partially owned by OEMs, so car manufacturers. And we are actually one of the few independent operators in this market. Then you could argue, is it an advantage or disadvantage? I don't necessarily think it's an advantage to be owned by an OEM. We saw that last year as well, that the focus quickly turns to the factories, maybe not as much on the car sharing business. Traditionally also, it's about displaying cars around. So I think while there is definitely some power behind it, we also need to focus on operating the business. And then there's a question on Zipcar. Zipcar is a station-based operation today. They've closed their free float car sharing, so that's why they're not here. There are a number of station-based operators around Europe, which to us is a different kind of business. It is still part of the overall car sharing business, but for us, I think it's specifically on free float. This, I think, the last maybe comment on this is this hasn't changed much in the entire of 2020. We see the movements now as societies are reopening around Europe, with a few more cities coming in, but also more cars being put on the street. So it's something that's very interesting in the coming years, and hopefully also we will start impacting these percentages that we see on the side, making shared cars a bigger part of the total number of cars. A different way of looking at it, this is only a selected view. This is slightly egoistic, but based on our perception and not least the locations that we're in. Some of the biggest competitors in our mind, obviously Share Now is the leading operator in Europe. But also interestingly, Six traditional car rental company have now started in Germany to balance their fleet, meaning the surplus part of their fleet, that they're putting that into a shared solution as well. Which is also why in the previous slide, they're positioned just below GreenMobility, and with a question mark on their fleet size. And this is just to simplify that some days they have a very small fleet, and other days they have a larger fleet, simply because it's variable. Obviously, I think that there is some advantages in that bundle, clearly, but also some disadvantages because their focus is still on rental cars and not as much on operating shared mobility. But it's definitely increasing the total fleet size of European cities. We have, turning back to the map here, we have Miles Mobility, a German privately held company, which is also doing quite well. I think they're definitely someone to look at as well. The difference is they are still operating traditional vehicles. They are not focusing on EVs. So that's interesting that they continue to do that. Poppy is based in Belgium, so a direct competitor of ours, operating with a mixed fleet. Then we have some of the smaller ones, but Nordic ones. Vybil in Norway, we have IMO in Stockholm, and then we have WeShare. Not necessarily last. WeShare is a car sharing division on the Volkswagen Group. They have just moved into Hamburg from their hometown of Berlin, where they launched 2 years ago. So we do see some development. We do see some movement from larger players. But ultimately, if you want to reach a profitability in this, I think it's still focusing on the service business service part of the business, operating every day, and that's where we see differences. Typically, the larger ones owned by OEM has a different purpose of being in this market. Then the last one, CDB. I actually think they've launched the CD more in the Baltics, but also someone who's moving quite a lot. They are operators all around Europe. We do see some interesting development in Eastern Europe as well, in Poland and other countries as well. So this is something that's fastly developing across Europe. And if any market, I think actually the UK is the one that's developing at the slowest pace. They only have a few operators there. They do have some station-based, but it seems that free float is not really reached market maturity there. Then being a listed company, and I think anyone in this space, it's also interesting to see what's the value of a company. What's the value if you have a number of stocks around Europe? Where is this potentially going? I think you can, based on some of these predictions before on the future market size, there is a number of ways where you can start calculating this. But obviously, it's always nice to have some kind of reference point. And to me, the best part is when we look at the number one, which used to be two companies, Drive Now and Car2Go. Before they merged, they had co-owners, each of them, and they made some trades to buy out their external partners before making a merger. And these are numbers from 2018, so roughly 3 years old. And the way we look at our business is typically we break it down in cities and we break it down in cars. Cars are our revenue center, and obviously cities likewise. And when we look at these two companies, then a city, at least at that time, was valued typically between 20 and 30 million euro. And that gives you some indicators on where is this moving. Obviously, this has developed since then, or at least the market has developed a lot in the last 3 years. But these are some fixed points. We also see some new shared mobility operators going public in these months, not into car sharing, but more in bicycle sharing, moped sharing, and so on. So there's a lot of things happening at the moment in the market. But we think it's very interesting to follow and see how these values are driven and how the market is growing based on this. For GreenMobility's part, as I mentioned earlier on, we are currently in 8 cities with a total of 950 cars. And despite not being the leading company today, that's our aspirations. We do want to be number one in Europe. That's a clear target for us. For us, we measure both on number of cities. We want to have presence in 35 cities by 2025, which roughly means we have to launch 5 to 6 new cities every year. But we also want to be number one on fleet size, specifically on electric vehicles. And here, I think it's important to note that the biggest operators today share now with 11,000 cars. At least 3/4 of the fleet is traditional cars. So this position is clearly open for reach, and it's something that we are working very hard on achieving. Obviously, also reducing a lot of CO2 emissions and private cars in city centers. It focuses very much on revenue, both in existing cities, but naturally also launching a number of new cities, bringing new EVs to the market every year, and having a good interaction with our competitors. So we continue to build this market across Europe. That was a small sort of tour around the competitor landscape, but also some key facts on how we see the market developing. If there are any questions, you're very welcome to post them. And if not, there's a question here on when will we have any news on the German market. I think what I can safely say is that obviously Germany is an important market for us. We see it as a potential market. It is possibly the most developed car sharing market in Europe, where we have a lot of both small local operators but also large operators. So this is something we are working on at the moment, and as a listed company, we always disclose this information once they're ready to the entire market. But I think the best I can say for now is that this is a key focus for us as well. Then there's another question: which were the 5 largest cities you started operating in? So latest cities. So the order of cities were initially Copenhagen, then Aarhus in Denmark, Malmö and Gothenburg, Antwerp, Ghent, Helsinki, and Brussels. So if we go back, then the 5 latest would be Brussels, Helsinki, Antwerp, Ghent, and then either Malmö and Gothenburg. They were launched the same date. Hope that answered the question. Perfect. If there are no other questions, then there's a question on the way, it seems. So there's a question here whether we will start joining the large German cities where there are already a lot of competitors, or focusing on smaller cities in the beginning. I think ultimately we would like to do both. In practicality, that's not possible. But we are looking at both. If we take Berlin as an example, we have at least 6 operators today, so it is a highly competitive environment. I don't think that the competition as such is an issue, but we also look at the current density. So today there's roughly 3,000 shared cars in Berlin, if not more. And you could say that's a lot. But a city like Berlin, I think if you take all of Berlin, it's more than 5 million people. At one point, 3,000 is going to be is way too small. So it's also about timing it, I think. So there is some value in having big cities and different value in having smaller cities. What we typically do is we would like to combine those two. We operate more efficient this way. So an example of that is we have Copenhagen as what we call a hub city. And then we have, for example, Malmö and Gothenburg as satellite cities. Both of them are smaller than Copenhagen, and we don't have an office there. So customer service, marketing, and so on comes from Copenhagen. We have a local street crew. So we could easily have one large German city and then a number of smaller cities connected to that. So to answer the question, I think the best answer would be that we are looking at both. I would find the best combination to be that. Then there's a question on the car model that we make, so we use, whether we are going to continue using the Zoes or considering other car models. And I think the upside for us, or the advantage, is that when we started 4 years ago, the possibilities within EVs were very few. We had the Zoe, we had the BMW i3, and the Nissan Leaf. Today we have a bundle of opportunities. There's a lot of new cars coming, EVs coming into the market as well. So we are constantly looking at and testing also a number of cars. For us, the key focus is still and will remain obviously cost. That's one part, but also simplicity of the car. Specifically for our customer, that you don't need to spend 5 minutes navigating around 10 different screens or doing settings. It needs to be relatively easy to get going, because our customers are typically in the car around 30 minutes. So you don't want to spend 5 minutes setting everything. That said, we do see there's been a lot of new models in the market. So I could definitely see a future where we have a mixed fleet or various cars in the fleet. But the upside with one car model is also, we know very well, we can take it apart and put it back together. So from an operational standpoint, there's definitely an advantage in that. Perfect. I think that was it. Thank you, everyone. Thank you for listening in, and thank you for all the questions as well. You can obviously find much more information on GreenMobility either at our website, greenmobility.com, or our investor site, greenm.dk, where you can also see past webinars. Thank you for today. Enjoy the day.